All right. Happy New Year, everyone. I think we're going to go ahead and get started because we do like to start right on time. Thank you for joining us. We'd love to know if this is a good time or a bad time for everyone, or if earlier in the morning or later in the day works better. We'd love the feedback. Just let us know. Also, it looks like we have a bunch of more new subscribers to our YouTube channel, which is awesome because this will be there later today or tomorrow as well. If you have questions, be sure to hit the chat feature, raise your hand, any way to get our attention, and we will unmute and let you ask questions. But other than that, turn it over to Dave.
All right. Well, welcome everybody, and thank you for spending some time with us. We talk about emotions all the time in investing. I can't stress enough how emotions have no part in investing, and yet we diminish them in our own minds all the time. We think we aren't emotional about our decisions, and all we really are is flesh-wrapped emotions. That's what we are as beings. Frankly, it's the way God wired us. I don't know why. I didn't make that decision, but He wired us to be bad investors. We really are by nature. Everybody is emotional. We don't like to think so, but let's say we didn't like the outcome of the election. We don't like what happened in Washington, D.C. We hated what happened all summer long. We don't like any of that. The world is upside down. What's bad is good and good is bad. And I can't figure out if I'm a man or a woman or if I'm acting the right way or saying things the right way. Everything is backwards. And it makes us all fussed up. It really does. And I don't care if you're on the left or on the right. It fusses everybody up. And then we go to the news, which is a constant reel of what's wrong in the world. Let's run that reel again and again and again and again and again. And in a time of turmoil, human beings, human nature is to go find more information. I just need to know more. And through that process, we in fact bury ourselves in more and more and more and more, which is now becoming 100% negative feedback. This can't work. This won't work. It's going to blow up. All of that, if we don't believe it as an old saying, if it doesn't bleed, it doesn't lead, is the old newspaper headline. It won't lead. But think of where we are today with the hyperbolic screaming and yelling of commentators for your attention, for even for a second. There's another really nice tweet. No, they're not nice tweets. They're smacking at each other all the time. Well, there's another nice little comment to open up. No, they're not nice. It's not. And it also then, to make it so we don't go out and make an irrational emotional decision, then even though we're all fussed up and emotional, we then look for the reasons why it's really a good idea to go ahead and sell or buy or change directions, question the objective that we have now, because we're human. And to deny it really puts us back. And we'll show you a couple of data points today, but I just wanted to talk for a minute first, because this is a really hard time for all of us. This isn't new. This isn't just you, and somehow we just don't feel this. That all year long, here at Petso Financial, being in lockdown isn't weird to us human beings. Not being able to see you is just perfectly normal and fine. And that doesn't have any repercussions at all. That we can't go out and enjoy our grandkids like you can't either. It plays out in multiple ways. I've stated this before. I'm on the board over at Hillcrest. And I thought, basically we're going to get together for dinner and talk about a few things, but have a couple of glasses of wine and dinner once a month and it'd all be good. No. Now it's COVID. And then we find very entitled, if you will, people, very privileged people getting in fights on a golf course. like the nicest one in Boise? Does that make sense? It makes no sense. Is that just because they're just angry or drank too much? No, it's like everything blowing up. Is it okay that cities burned all summer long? No, it's not okay. But it's COVID. And so we're all even in a more emotional, tense time. And it makes it even harder to make good decisions. So we have to guard against that. Acknowledge it. Know it's real. And it's okay. It's okay to feel it. But it's not okay ever to manage your money because of emotions. And because you don't agree with whoever's in power, you don't agree with those statements, you don't agree with that, does not mean you should be doing anything with your investments. And I know, because everybody feels it. If you're on the left, 2016 was a really big problem. And everybody said the market was going to tank. Well, it didn't. It soared. If Joe Biden was going to become president, market was going to tank. It didn't. Why? Because the number of iPhones that Apple will sell this year has nothing to do with who's in the White House. Nothing. Nothing at all. The fact the economy is going to be growing next year has nothing to do with who's in the White House. I mean, zero. It might grow faster under Trump because of less regulation, but it's not going to stop it. It's not going down. The world's going to open up. And that's why the market's rallying. And just to make sure that we all fully understand this, they're just going to throw more money at everything. That's not good long term, not by any stretch. But it sure isn't going to tank the market tomorrow. It's not going to tank the market. And because we don't agree with whatever power there is absolutely no reason to manage money in any different way. But everything in your being says you should, because you are emotional, because you're a human being. So it is hard, I get it, but acknowledging it and understanding that you are emotional will help in a number of ways. Number one, it'll be easier to walk away from the TV for a while. Trust me, I have a lot better weekends, absolutely 100% disconnecting. I know, I admit it, I've done it for years. I do not follow the news over the weekend. So I'm at a complete loss when I go on Kevin Miller's program on Monday as to anything that would have happened over the weekend. It's not necessary for me to talk off of sound bites for Channel 7 on Monday mornings. Completely unnecessary. But I'm 100% convinced of this. I have a lot clearer idea of what's really going on in the world than people that spend their weekend listening to people babble their talking points all weekend long. I know it. I used to be listening to that all the time. And now I think more clearly. You can too. And it's important to pull away. Pull away when you find yourself getting fussed up. Life isn't fair all the time, and the world isn't fair. It doesn't play by the same rules. But I think things are going to come around. They always have. If you haven't seen it yet, I really highly suggest you go to YouTube and see Dow 30,000. If you joined us on our last one, that was great. Our last Zoom meeting. If you haven't seen it, it's a walk through our adult life. All of us. It works. The 1980s saw 20% interest rates, the early 80s. We saw wars. We dealt with the Soviet Union, an unbelievable problem. Things tend to work no matter what, but what's in front of us commands all of our attention, not history. That's the emotion welling up. I get it. I feel it too. This isn't right. Things aren't right. There's too much anger, and there's no question that there's also beginning to be signs of really censoring certain opinions. That's going to change too, in my opinion. The Wall Street Journal talked about it today. If you want a great editorial about that, that is super. It's not going to stay here. It won't get out of control in my mind, I hope. I certainly hope. But it's not a reason to react on your investments. Certainly not at this time. Certainly not at this time. And again, the bottom line is this. Emotions have no part of your investments. Now, I want to tell you a couple of real life things, and that have happened in the last little bit. And yes, they've happened for the 40 years I've been in the industry, but it's a little more intense right now. We've seen people that in the pandemic have wanted to sell so bad they went ahead and sold. Wouldn't listen to advice. Come back in, good for them, get back engaged again, and do it again. What I'm saying is that once you do that, you go to the dark side. To borrow from Star Wars. You can't come back. It's not because we won't let you come back, but mentally you can't come back. You either believe in a process that has worked your whole life, works better than anything else, and you stick with that process, which is there's ups and downs, but you buy the great corporations of the world. Sometimes they're through mutual funds or exchange-traded funds, weird things called banknotes. There's all kinds of ways to do it, but you're participating in the great corporations of the world that through all administrations, through wars, through multiple corrections, continue to raise their income, their cash flow for our whole lives. Because once you start trying to trade around that, but I know this and I know that, you've gone. You're gone. You're not only not going to be right, but now you got to be right twice because you got to figure out when to come back. And you think you're going to get out because it looks kind of crappy. And then the market, you're right, let's say, and the market goes down. When do you get back? Because once the market's down 10%, we're sure it's going to go down 20. Just watch CNBC's latest evening thing, which is markets in crisis. Tune in at 6. Oh, we better tune in at 6. And so all day long we've worried about it. Now we're going to tune in at 6 and watch Kramer and others go, oh, I just don't think it's ever going to get better again. Oh my gosh, I can't believe it. Nothing's going right in this whole world. And you're going to listen to that and come back and go, I think it's time to go and invest again. I'll write that check. No. Don't kid ourselves. You won't get back. And that's why you have to play. It's not easy, but it really is. This is the hardest, easiest, all-in-one way to wealth. Because all we have to do is control us and our emotions, and we win. It's easy today to be angry. Super easy. We all are. We all want our life back the way it was. And it's coming. But in the process, institutions have been wrecked. And everything seems really upside down. Right? It really does. So let's be careful not to impose that on our investments. Okay? Let me walk you through a couple of things here, if I could. It's just, and then we want to turn this over for questions and all, okay? All right, we got that one. There we go. All right. This is my favorite guy for investing, right? The 4 most dangerous words in investing. This time it's different. Sir John Templeton. I had the great privilege of meeting this great man, and he is a great man, was a great man, really great man, and an amazing investor. I got to meet him twice, of all things. That's just how privileged I've been. And it is just something to think about how much wisdom he has. But those words there, this time it's different, is how we always feel. Now, I will also say, and Sir John said this beautifully, I love the tenuous points, the tension between these 2 points. This time it's different are the dangerous words. And at the same time, every time is different. Every single time it's different because there's different human beings. There's different technology in the world. There's different companies. We do things in a different way. It's always different. But when we think because of politics or our emotions are there, that's what we're speaking to. Of course the world is different. Of course politically it's different. Of course we've never had so many snowflakes in the world that feel privileged. We also haven't had so many incredible people in the world because there's so many more people. We've never had media like this because we've never walked around with a cell phone. But is media always nice? No. Does media protect people? Yeah, if they agree with them, they do. Maybe they lie to get a headline. Yeah, that's always been around. It's just more intense right now. And in the middle of a pandemic, it's more intense for everything. This time is different, is very dangerous when it comes to our investments. Let's roll on. You know, this one you may have seen before because we like to show it a lot. If you think you can jump in and out of the market, you're wrong. I just had this discussion today. I have it almost every single day. The reason my Apple stock is up like 20-fold from the first purchase I made is because I own it. I don't trade it. If you want to trade stuff, you can get rid of a lot of your upside, most of your upside, and in the end, all of it. It doesn't take much. If people talk about stop losses as an example, okay? So what about those stop losses? You put a little, barrier down here. Why? So that every correction Apple makes, I can sell out? How many times has it fallen 10, 15, or 20% on its way to thousands of percent gain? A dozen? More? There isn't a way to miss the downside. But there isn't a downside. I mean, let me give you an example of the way the human mind works. If you put $100,000 into an investment and it grows to $500,000, and then we have a certain to occur over and over again, all the days of our life, market correction, right? It happens. And it falls back 20% to $400,000. Human beings say, I lost $100,000. Not that you made $300,000 from the 100 you started with to 400 you have now. That's what we're fighting all the time. Not me, us as human beings. We're fighting this all the time. Our perception. Isn't that crazy? Oh yeah, I just lost $100,000. No, you made $300,000. That's what actually happened. And if we're trying to trade on the way, it jump out. You see, if this is a tough time, this last 20 years, really tough, well below the market averages of 10%, okay? For long periods of time, since 1926, pretty long period of time. Markets average 10. If, in fact, you stayed fully invested, you only made 6. But if you missed out on just the 10 best days, just 10. And what is that? 20, that's thousands of days. And you only missed 10. You get a whopping 2.4. If you miss 20 days, nothing. Nothing. You get nothing. And so when people are like, well, cash makes me feel good. Earning zero, losing money to inflation every year, that doesn't sound like it would feel good. Honestly, sometimes we have to get over or change our thought patterns and think a little differently. Because the cost of holding cash versus even a very moderate, low moderate risk investment that maybe makes 7%, not 10, 7. Means that if you want to hold 100,000 of cash, it costs you 100,000 every 10 years. That doesn't sound like much fun to me. Well, it makes me feel good. $100,000 good? I don't know. That doesn't sound right. Well, I'm going to wait for what? I'm just being conservative. I know all the buzzwords. Conservative sounds good. That's a good, thoughtful. That's not emotional. I'm conservative. I'm just approaching this, and I see this over here. I see that over there. You're reading headlines. It's emotions. It's emotions. And by the way, just in case you feel like you could trade these 10, you wouldn't be out for those 10 best days. Guess when they occur? Right next to the worst days. It's amazing. Volatility is up and down, and they occur right next to each other 2/3 of the time. You don't just get the best day like out of the blue, like we're just kind of skipping along, the market's up 10%, it goes, whoop, oh, I'm going to go up 6% today. No, that doesn't happen. It goes up 6% because maybe the day before it went down 8. That's when it happens. Out of the blue with no fanfare. It's tough to do. Don't try to do it. All right. I want to talk about this because this is back to the average investor over time. Another way of looking at the prior chart. Okay, you're not just talking about the best days though. This is what people have actually done by money flows. So the average investor over the same 20-year period of time on their $100,000, just compared to buying it and leaving it in the S&P, the average equity investor did $100,000 less. Stunning. To be honest with you, I used to phrase it this way. You couldn't be this bad if you tried. You couldn't. You couldn't say, I think the market's going to go down, so I'm going to buy. I'm going to study. I think the market's going to go up, so I'm going to sell. You couldn't do it. You do better than people do with their raw emotions and then laying all of the good rules on top and all the good statements of being conservative and all those things and saying, I'm just being cautious here. Right. You be cautious when you need the money. Period. That's when. That's when you be cautious. Okay? Now, so you can see, obviously, and on bonds, people do even worse, which is unbelievable to me. I don't even know how you could do that bad on buying bonds. It's bizarre. But anyway, that's how money flows work, and people are pulling money out when the market's down. They put money in when the market is up. Now, you all own this fund I'm going to talk about. You may have seen this chart before. I just want to give real life examples here too. Okay, this is my final, and we want to answer your questions. So think them up. Very rarely does Franklin Income Fund go down. It just doesn't go down very much. Not very often. It's been around since 1948. 1948. So that's hundreds of rolling 12-month periods. Okay, right? Because month to month, January to January, February to February. So we can get more data points. In fact, instead of just the number of years, it's 12 times the number of years for the data points because we want as much data as we can, right? So how many times has it actually fallen? 10%. And in this case, let's look at 9, even 9%. It's only fallen 6 times. Now 7. Has it fallen more than that? That much or more? 9, 10%. That's it. It rarely happens because it has so much less volatility than the overall market. And that's from any period of time, peak to trough. And so we think about what this does for people. So what happens when you get into a pandemic or whatever the problem of the day is? Everything sells off. Just whoosh. So Franklin Income Fund did too. And I think at one point it was very top price to bottom was down 25%. 25. Now, very unfortunately for some people, they sold. Thank goodness that was none of our clients. money was going out the door. And I mean, whether it was down 15 or down the maximum one-day drop of down to 25. That's what they did. But I want to point out that that had happened 6 times before, to some level of it falling 10% or more. Only 6 times. But when it happened, the average rate of return was 17% per year for the next 3 years. That's the average. What I like to focus on is the last column, which is the lowest. The worst 3-year compounded return since 1948, when there is a drawdown of 10% or more, is 8% a year. 8 a year. Okay, does that mean that Franklin Income comes out and puts a stamp of guarantee on it? No, no FDIC assurance. Only hundreds of periods of time before that reinvesting dividends, buying even low-risk things, has a tremendous rate of return. Look at that. 17%. On average. But if we let our emotions run, what do we want to do? I don't want to play anymore. I don't want to lose anymore. I just read this thing on the internet from Schiller or somebody who's, a Nobel Prize winning, how many times I have to say that? You had to put it in front of his name because you're not just allowed to call him Professor Robert Schiller, has been bearish for 10 years. Not exactly helpful. Not exactly helpful. People don't know the future. It doesn't matter how smart they are. People don't know. And when you read about it and you read the doom and gloom and you get caught up in it, and then we add political turmoil, we add on top of that a pandemic, your life's upside down. Maybe you even lost a friend during this time. Maybe you lost a spouse. Maybe you can't even go to the nursing home to see your mom. It doesn't put us in the right frame of mind. And then we want more information, so we go to the dark web. I call it the dark web because the whole thing is just nonsense, and everybody's screaming and yelling for your attention, your eyeballs, to lead us further from the truth. Further from the truth. It isn't helpful. So be careful the inputs, especially in times like this. It's so important. Our inputs are what's in our heart. That feeds what's in our minds. And we can deny that we're emotional about money or anything else you want to deny about in life. But we're emotional creatures, and that's how we feel all the time. We don't have to react that way. But let's not hide behind buzzwords about why you're doing it. And let's not dive deeper into nonsense. Here's what I guarantee. We will have more market corrections in the future. Many of them. And all of the smarty pants out there knew that if Joe Biden was going to be president, the market would tank. They knew if Georgia went blue, and therefore the Senate, that it would tank. That's what everybody knew. And tomorrow, nobody will remember that Joe Schmo from Goldman Sachs knew the market would go down and was wrong then, wrong 3 years ago. We know people on Wall Street have been there for 20 years, paraded around all the time. I swear they're almost never right. Literally, you could flip a coin over and over and over again, millions of times, and never be as wrong as they are about everything. Everything. They're never right. I have no idea why they're there. But when they have a published track record, you can see it and you know it. Or maybe you were listening to their commentary. JP Morgan hasn't been right with their spokesman about anything, I don't think. Crazy. Anyway, that's enough from me. Emotions have no part in investing. And I know that this is the most emotional time there is that I can remember. It's really tough. It's really hard. I know 2021 is going to be better. We're going to have vaccines. They're not coming out as fast, blah, blah, blah. And there's 10 reasons why we should be depressed. But we're going to get through this because we always do. And once again, the number of iPhones that Apple sells has nothing to do with who's in office. Let's see what everybody wants to talk about.
All right, just as a reminder, you can chat. Craig made a nice comment there we can all see. And then also, if you'd like to raise your hand, we can unmute you. Just please, questions now.
Anybody? All right, I'll just start with Craig, you're right, and it's a problem in the long run. No doubt about it. Okay? Just not today. And yes, it is a problem. We cannot keep printing money. And right now, that's exactly what's going to happen. We all know it. It's been promised. And it's one party rule right now. And that party wants to spend a lot of money. It's a problem. And I am concerned about inflation. I might as well just say it. I'm concerned about it coming, but not right now. Okay? And let's see. Craig, it's detrimental. There's no doubt. Raising taxes as promised and higher regulation is not good for business. It may be something you vote for. I'm not here to condemn that. I'm just simply saying that no, as far as business, it's horrible. Look, coming off of 09, we had the slow, or 08, excuse me, 09 and 10, we finally turned the corner, we're getting better. It was the slowest recovery from the steepest recession, which doesn't make any sense at all, in history, because we piled on regulation and raised taxes both. Okay? But it didn't go to zero, and it didn't turn the recovery around to zero. But we've also proven that you release that, lower taxes, lower regulation, you have explosive growth again. I'm glad we had time to prove that, because here's what all those really smart economists told us during that time. Well, this humdrum, slow growth is here to stay. It's the way of the world. Nothing can change that. Policy can't change that. Nope. We're going to be lucky if we grow 2% a year forever. No more 3% or 4% growth. Can't happen. Yes, it can. And that's been proven wrong. Hopefully we'll be able to see that again someday soon. We will this year no matter what. Can't stop it this year. Okay. Impact of EU, Asia, and Brexit. I didn't hear you about invite on golf course. The tail end. Okay, I'm not sure on the golf course. So there was a fight on the golf course. I was just relating it to emotions during the pandemic. Okay, Brexit is exciting for Europe. It's a change point. I think it's exciting whenever a country gets unleashed from giant organizations and they decentralize. That's the way I see this, as giant European. Now, and let's not forget, this is the 5th largest country in the world. That's big. That's big. So Britain's very capable, a very big economy on its own. It's the banking center, and I think it still will be for Europe. Anyway, London's very vibrant, very alive, and they're going through a really horrible time in the pandemic right now. They've sealed their deal. As far as having trade agreements, I think their future looks incredibly bright, brighter than the rest of Europe by far, no doubt in my mind. But it'll take time to work through this recession that they're in for sure. And Asia is a problem because of China. It's a monster problem. Look at the rallies for Trump in Japan. What do you think that's about? They just love Trump. They love what Trump is standing up to China is what they love. That's what was happening there. So yeah, they're scared to death. I would be too. Taiwan is a concern because obviously if you're just going to, in everybody's face around the world, get out of the deals you cut about Hong Kong and just simply arrest people and put $1 million+ Uyghurs in prison camps in front of the world and don't care what they say, you don't care. So if I'm in Taiwan, I'm worried. Okay. What do you mean? Oh, a fight. Okay, there you go. Bitcoin. Now, Bitcoin is interesting to say the least. I don't know what to say about Bitcoin except, well, I missed it. I never was going to be part of it. I don't know what it is as far as why it's Bitcoin. Yes, I know the technology behind it called blockchain and all those things, but why not Petcoin, the one I'm going to create next month? You know, JP Morgan has one. Goldman Sachs has one coming. You know, that doesn't say to me that I need to own Bitcoin. And you can't go to the store with something you don't know if it's worth 40,000 a coin or 30 by the time you get there. It's too volatile. So for right now, I don't know what to say about Bitcoin except, wow, 0 interest rates, 17 trillion at negative interest rates around the world, and another way over 10 trillion sitting in the US earning 0. Chasing things sounds like it might, right? So yeah, we're gonna have bubbles popping up all over the place, but I tell you what, I don't ever do. I don't ever say, I need to short Tesla. I learned that lesson a long time ago. Something can become overpriced and keep going for a very long time. No, Tesla is not worth whatever it is now. It's 850 or something, at least the starting of today, a share. That's unbelievable. It's just not worth that much. But I said that at 500 and way smarter people were shorting the stock at 300. Shorting, you don't step in front of a Bitcoin or run you over. Okay. Anybody have any questions? Feel free to raise your hand. We'd love to hear from you.
Do you want to comment on Boeing, Dave? That just came up.
Okay, Boeing. I'm not a Boeing analyst. I like the stock long term because there's only 2 airplane manufacturers in the world. And the other thing I like to do is try to think of things in a very just common sense way, okay? So we can look at it, we can do all kinds of analysis, but here's the bottom line, okay? Airbus doesn't make planes as productively as Boeing does. That's why they were number 2. Now they're number 1 because everybody shut Boeing down. They'll be back. Even if Airbus is better, how are you going to get all your airplanes? And here's the other point. China wants to make airplanes. Well, isn't that groovy? Like they didn't want to make airplanes 20 years ago, 10 years ago, 5 years ago, yesterday. The same reason why they want to make microchips, right? They'd rather make them in their country. They'd rather keep the technology themselves. They would also rather employ their own people. And airplanes have a huge system. I mean, they think Boeing has like 0.5% of GDP in our country because the supply chain is so long. So many employees, so many companies that supply them. It's huge. China can't figure out how to build planes that don't fall out of the sky. Or they would. So that's kind of how I feel about Boeing. It's a tough time for them, no doubt. And they're going to have fees and fines that are going to be just piled up in the billions of dollars. They're going to have to pay back some debt before they ever start paying a dividend again. But I think they're a long ways from done from selling a lot of airplanes down the road. They're the top aerospace company in the world, in my mind. So they'll be back. Hang on. Somebody's asking about mushrooms. I got my attention. Psychedelic mushrooms. Okay, yeah, that's true. That's kind of funny. You're right, Craig. It's not with all the pot stocks around now, I'm sure that's going to be up next and should be legalized, I'm sure, at least in Oregon anytime soon. Okay. All right. I think we are running out of questions. Anybody?
There's one. Do you see the comment? Growing backlash against China because of the way they manage their relations with other countries. Just Craig commenting there.
Oh, yeah, there is a backlash, and it's real. I mean, it is a real backlash. I really appreciate, oh my gosh, come on. Anyway, there was a meeting in Europe, and Merkel and the French guy, I just lost his name, Macron, there it is, and Johnson from the UK were all there with China. And this was just an article just in the Wall Street Journal, just this past week, talked about it, that they had met, and there was in China came there, Xi came there, and hey, do you guys see us as a rival, And it was like some niceness, a nice comment here and there. And then Macron said, yep, sure do. Absolutely. And the very next week, they floated one of their aircraft carriers through the China Sea. Very offensive to China and very in their face and very pointed that, yes, the world is very aware of who you really are. You guys are awful, horrible people, and you want to take over the world. You can't be trusted in anything. And so that is where the world is coming. And that's a really, really good point. So thanks for bringing that up. It seems we're going to in Africa and South America as well. You know what? Because you can't keep it. You can't keep it quiet. It's kind of if you get in bed with the mafia, you're going to wind up feeding the fish at some point. That's just what happens. It's just not. It's like you watch these groups that are so full of the right kind of speech, and then pretty soon they're lashing out and eating their own. They all do it. We all do it, right? You can't pretend to be tolerant when you're not. It just busts out somewhere, right? And so you think you're going to have that be the case. Well, they're getting along fine with us here in South America. No, that's going to change because they're awful people. It's not going to work. So I agree with you. It really has changed the dynamic with China everywhere. People are becoming very much aware. So like or hate Donald Trump, he really did a good job there. He really did a good job there. Okay, have you heard of companies reconsidering expansion in the U.S. due to change? No, I have not heard of any problems yet. It is too early to tell.
I found this on the web for expansion of the U.S.
Oh, Siri's talking to me. Sorry about that. I don't know what she heard there, but she found something for me on the web. So expansion in the U.S. it could be a problem if we raise corporate taxes too far. Can we get up to 28% and probably not run too many companies away? Yes, but that is why they were coming back. That's why manufacturing was increasing here. That is my biggest concern. It's not the top personal income tax bracket that concerns me the most. It's the regulations and the top corporate tax bracket that'll chase companies overseas. Okay. Don't forget, these are on YouTube, and don't forget to go to any back ones if you want. Jennifer did a great job putting together the Dow 30,000 for us, and I love it. I love watching it again because, well, I guess I didn't watch it, but did it. But I love watching it because it's such a fun thing, because it's my adult life. It's your life too, right? It may be a walk from me during my career, but it's also our lives and how things work out. Okay? Thank you all, and we really appreciate you. Let us know your comments, okay? What can we improve on, okay? And I just want you to know, so I see myself too. Look, this is just a little cancer stuff here. I don't have cancer. I know my nose looks like it's going to fall off. I'm glad this is not a really good camera, but I married a nurse, and this is the kind of crap you get. They just decide they got to lather you up. They worry about everything. And so there you go. That's what happened. Okay. I love you, baby. Thanks, Rania, for doing that. All right, you guys, have a great rest of the day.